Let's do some trading now. Alan Uckman joins us, Chief Market Strategist at BullseyeOption.com. What's going on, Alan? Good morning, sir. We got the VIX dropping here, even as stocks are mixed and continuing a little bit of a fade in volatility. We came into Thursday at 35 VIX, and now we're below 29. So I guess maybe time to visit the other side of the chart for VIX?
Yeah, that's the big story, is that we continue to make new lows, and every time we made a new extreme low, the volatility has not made new highs. So we've had a lower path here, lower highs in this VIX for the last 3 months with these 3 big downward spikes. Now, for me as a trader, that is bullish divergence. Now, it hasn't kicked in yet. We had a nice bounce on Friday, but obviously we need to build on it. Every time we've seen somewhat of a relief rally, the market smacks it right back down. But the big but today is the PE ratio right now is at the 10-year average. So stocks are extremely cheap because earnings have been so good, but price has been not good.
So the price has been not good. I like that, Alan. So as the price has been not good, it's gotten a little bit less worse. It's gotten slightly better since Thursday. What do you look for to see if there's actual, because we talked about this last time we spoke, where even though you're looking for this bullish divergence to materialize, you're respecting trend. You haven't been chasing the market trying to buy dips. In some companies you have been, but not the broad market. What do you want to see to get more confidence and maybe take a stab at the index?
Well, we need to see the index get above the 4,100 level. We've been trading in the big picture, if you look at a weekly chart, between 4,800 and 4,100. So we're at the lower end of the range. The market's extended a little bit, kind of shaking the tree below 4,100. But I think a move back above that and then to see how we react and get back anywhere near, that midpoint would be very much a positive. That would tell us that we're out of the woods. We're still a long ways away from that right now. But like we've talked about before, there are a lot of positives in the market except for the price. And we are extremely oversold. And from a PE ratio, just the basic ratio, the S&P being below 17, we haven't seen that in years. So at some point, people are going to see the value. Even though treasuries now offer a 3% yield, stocks still have a lot of potential upside. And this is an average pullback over the last 50 years. The average drawdown has been about 14%. So we're right at that average. And it has bounced back many, many times in the past.
Okay. Today, Alan, you're looking into the chips and you're looking for good old Intel as some stability has emerged in the chart the last couple sessions. What do you see?
Intel inside. Now, this is a stock that has been a laggard, obviously. So it's 25% off its top from last year, and it's obviously trailed what the NASDAQ has done over the last 3 years. Now, it's been trading between 45 and 55 for this year, so 50 is a midpoint upside. We'll see if we can get there. And in the last 5 years, it's traded between 40 and 60. So 50 is a midpoint magnet that it could move to. So the play here, again, PE of this stock is 8. So it's a very inexpensive stock. Not to say that PE can't get cheaper. Stocks can always get cheaper, but it is a low price value at this level. So what I'm looking at is a September 40 call. Again, 40 is the bottom of that range. September options trading about, $550 right now. It's got 4 months of time. It's only about $75 more expensive than buying June for twice as much time. So it's a smart play with an in-the-money option, looking for this to rebound.
Okay. So how high are we thinking? I mean, Intel is generally, other than the last slip through 45, it had actually found some decent support at that level, February, March, and that's while NVIDIA, AMD, some of the others were getting really blasted. So the market was kind of changing some of its favoritism. I think the chart of Intel looks better than NVIDIA, incredibly enough.
Yeah, I don't use the word favoritism with Intel because it's just been out of favor for a long time. Now, that psychology can change, and we could see some short covering here, and some people that have been short in this stock for a while have to take profits, and that could feed higher. So the target here, I'm looking at 50. 50 is a midpoint magnet. Now, if this stock gets to 50, this $40 call will be worth 10, so it'll almost double in value. So we've got plenty of time. Let's see how the markets respond. I think a lot of things can change between now and September for sure.
Okay. All right, so you're looking at the in-the-money call. Intel right now trading at $43. So as soon as it starts to move, you're going to move with it.
That's the ploy. Now we've been following the most trending stocks have been oil stocks. We've had British Petroleum, we've had Schlumberger, and so forth. So, there are some sectors that have been, remain bullish, and we saw a breakout today in Oxy. So you're seeing that area continue to show the strength. But on the other hand, there are opportunities for a lot of stocks that have really gotten beaten up. I think are at some inexpensive values. And you see how quickly things can change, like we saw on Friday, where a lot of stocks were up 5-10% on the day. So when it starts to feed on itself, when you get some short covering, we could see some positivity in the short term. Now, whether it holds, that's the big question, because as you talked about and as Ben has said, the sentiment has changed and it's shifted. Everybody's very negative. So let's see if we can get that psychology to come around.
Okay. All right. There it is. Alan Uckman with the bullish trade and a beaten down tech name, but one that's been doing better than some of its growthier peers as of late. Intel. Less bad. There you go. Less bad. I like that. All right. Thanks, Alan. Appreciate it. Chief Market Strategist at bullseyeoption.com with the 40 strike calls in Intel. Let's talk more about inflation.